Imagine navigating the competitive world of real estate investing and having a powerful tool at your disposal. After repair value, or ARV. We are growthsense.com. We built a platform that allows investors to buy, sell, and invest in real estate properties of all kinds, in all shapes, and in all conditions. This vital metric can change the way you approach buying, flipping, or holding properties, influencing your decisions and your bottom line. When considering whether to flip or hold a property, understanding ARV is crucial. ARV represents the estimated value of a property after renovations and repairs. For flippers, knowing the ARV helps in projecting profit. For example, if you buy a property for $100,000, spend $30,000 on repairs, and estimate the ARV at $170,000, you could see a potential profit of $40,000. This clarity empowers you to make informed renovation and selling decisions. For those opting to hold properties for rental income, a higher ARV can indicate greater appreciation potential and enhanced rental income. Number 1. Profit potential plays a significant role. A high ARV compared to purchase and renovation costs can lead to substantial profits. Accurate estimation of ARV allows flippers to determine if selling prices justify their renovation investments. Number 2. Financing is another critical area influenced by ARV. Lenders often base loan amounts on ARV. The higher the ARV, the larger the loan amount available for renovations, which is essential for those needing upfront capital. Number 3. Your exit strategy matters too. A high ARV attracts more potential buyers, making it easier to sell quickly. For investors considering holding properties, ARV helps assess future rental income and resale values. Number 4. Renovation scope is influenced by understanding ARV. Knowing what the property can become after renovations aids in budgeting and prioritizing value-adding upgrades. Number 5. Risk assessment is essential in real estate investing. Overestimating ARV can lead to financial strain if properties don't sell as expected. Accurate estimates help gauge long-term viability and profitability. Number 6. Market comparisons help in making informed decisions. Analyzing similar properties allows you to gauge your property's potential value post-renovation. Number 7. Long-term investment strategy relies heavily on ARV. Whether flipping or holding, understanding potential resale value guides future purchasing and renovation decisions. Understanding ARV isn't just about numbers. It directly impacts how you approach real estate investing. It enhances decision-making and negotiation power while improving budgeting for renovations. By knowing ARV, you can identify risks and plan long-term strategies effectively. Now, consider this. With all this information about ARV at your fingertips, how will you leverage it in your next investment? Stay alert for market trends and shifts that could influence your property values. Thank you for joining me today. For more valuable insights into real estate investing and how to maximize your returns through effective strategies like understanding ARV, visit our site at growthsense.com. Who knows what opportunities await you? Don't miss out.